Good morning, everybody. Welcome to another Daily Market Bar brought to you by Mike Bjork. Today is Wednesday, Hump Day. It's April 5th. We got a few economic news to go over today, so we'll start off with the ADP employment number. This is our first look at employment numbers this week. So tomorrow we'll have the weekly jobless claims, and then Friday will be the big one with the Bureau of Labor Statistics releasing their numbers. The previous month, back in February, we had 245,000 new jobs created. That was actually shrunk down. It was initially like 293, so it shrunk by about roughly 45 jobs there. Month of March, we had a forecast of 175,000, and it exceeded that to 263,000. So about almost 90,000 difference there. So no matter what we cut in February, the 45, we exceeded that even by further, almost double that in the month of March. So March was a good month. A lot of that is actually jobs are going into the manufacturing construction jobs. So if you look at the numbers that we are seeing, a lot of those are construction. Since it's coming into the spring, we're getting into those time periods where construction expanding, and then of course there's talk about $1 trillion, I believe it was, infrastructure. So people are just gearing up for more work up ahead, which is a good sign for the economy here. We also got two services industry indexes, kind of give us an idea as to where those are going. So the first one is the market services PMI. It's also flash for the month of March. So February we had a 53.8, and it dropped down to 52.8. So anything above 50 is still considered expansion, but something we want to keep an eye on because the services industry is our largest employment growth, or a larger employment line, where most of our jobs out there are with the services industry. And last but not least, we got the ISM services, or also known as the non-manufacturing number for the month of March. This one as well, it dropped down. So from 57.6 in month of February, forecast was supposed to be in the same range at 57.2, and it dropped all the way down to 55.2%. So that's kind of probably have an effect a little bit on the market here, as we'll see here in a bit. FOMC minutes are going to be released later today. We're about 11 o'clock West Coast time, so Pacific Standard Time, or 2 o'clock East Coast time. The FOMC minutes will come out. Now, what mostly they're going to be looking at is the pace of the interest rate hikes, and if there's any other information that may not have been released yet, they're going to be looking for that type of information. So they already looked at the dot plot maps, so they're kind of looking at that pace, or they want to see what things that might prevent the Fed from raising rates, or slowing it down, or increasing the speed, those type of things. So as to when they get these data coming out, they want to see how they should react to it as well. So just be prepared. There could be a little bit of volatility at about 11 o'clock Pacific Standard Time today here. Currently, the stock market's up. It is up from the highs. So we did have the stock market Dow is up quite a bit. It was over 100. It was even, I think, touching maybe 200 this morning, and I think since it's pulled back a little bit as well. They are still gearing up a little bit for the Trump-Xi meeting later this week, so starting tomorrow actually, and then Friday. There's also a Fed's yesterday, Fed Lacker out of Richmond had an immediate resignation. He was due to actually retire here very soon, but apparently it was got released that he released some information, confidential information, to an analyst back in 2012, and since he just kind of resigned his post immediately. So, and it didn't really roil the markets a little bit from that as well. So it didn't really affect the markets too much, but perhaps it was because he's a non-voting member at this moment. So, and he was going to be retiring here shortly. And of course, it's 2012, so whatever information they had is pretty much obsolete now. We're 5 years later. So, anyways, let's go ahead and take a look at the bond market. And the bond market, as we said on Monday, I said be cautious here because if anything, since we've reached this level, it's usually we get knocked down. So we are starting to show a little trend to go down here a little bit. So we went down a little bit yesterday, and we're on our way down a little bit today. We are off our lows. We're currently down about 3 basis points. When you factor in yesterday's, a lot of times we're going to have a price for the worst. They're going to basically give us a little worse pricing today, even though it's only 3 basis points. But when you factor how much more we closed below yesterday and then today, that's why they're kind of factoring it more in today's, because they didn't really get priced in yesterday. All right, so hopefully that makes sense for you guys. So rates were wrapped up a little bit today compared to yesterday. So that concludes it. But if you guys want to get more data throughout the day, just come over to Twitter. You can find me underneath Mike Bjork. I do post more data throughout the day on Twitter. And also, if you guys are looking, if you or some of you know looking to refinance or purchase, I do also originate loans, so I can help them with their loan programs that would best suit their needs. All right, folks, you guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.